Well, this time, everything the US does is threatening to melt down everything. Bessent just made a frightening admission. The tariff war isn't over. Trump's plan of giving a global ultimatum is coming, and countries have to bow down now or else. But Bessent just gave another admission when it comes to US bonds. It's the reason why yields in the last 3 weeks just keeps rising. Trump is out of cards. He's already paused the reciprocal tariffs to save the bond market in the first place. Now the bond market imploded and the king of the world did a U-turn. And it gets worse, the Moody's downgrade is expected to hammer down bond values as well. The yields in the 10-year and the 30-year could rise by another 10 basis points each. There's no semblance of stability anymore. Now, Bessent just rejected Moody's downgrade, calling it a lagging indicator. But doesn't that just mean the last 100 days was a fiscal disaster as well? However, Bessent just let slip the real agenda and why US bondholders are effectively screwed.
I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP.
Now let's recap what he just admitted. Bessent just told the world the deficit to GDP is at 6.7%. Now sounds tragic, but what he said next just confirmed the US Treasury bonds is a horrific asset to hold long term. You might earn money normally, but on the real basis, you'll likely lose money. Revenue is expected to drop, especially in a tariff war. As a result, inflating away the debt is the last resort. Now, firstly, Bessent didn't say he would reduce the US deficit. He said he will grow the economy faster than they borrow money. And that simply means the US government will keep spending as long as nominal GDP grows even faster. Now, the second part is key. Bessent will tolerate higher inflation to juice up GDP. If the US economy contracts by 2%, but inflation rages on at 5%, we are still at 3% nominal growth. And how does that play out for US bondholders? Well, interest rates will be below real inflation. Bessent just hinted the US will keep issuing a tsunami of bonds to keep the game going. Now, throw in the downgrade from Moody's and you have a real problem. If borrowing costs do increase for the US Treasury, this sets up a doom loop that accelerates the decline. It's a big reason why gold broke past $3,500 for the first time 2 weeks back. Real assets are getting bidded up because the new boss is the exact same as the old boss.